Welcome back. The trading day is underway. The North American indices are at least modestly positive. We are seeing some strength in the tech stocks, as you can see on the bottom of your screen, and new jobs numbers have landed in both Canada and the United States. Let's talk about all of this with John Zechner, chairman and founder of Zechner Associates. John, thanks a lot for joining us, as always. The Canadian jobs numbers weaker than expected. The rate of unemployment ticks up meaningfully. Does this increase the chances of a Bank of Canada rate cut later this month?
I would think it improves the chances a little bit, but then we had the inflationary numbers, which popped up, the most recent ones, so maybe that's an offset. You know, I still think the Bank of Canada, as well as the U.S. Fed, will lighten rates further this year. I just think as you're going to see more weak economic data, and that's just going to give them the support. I mean, when you look at the Fed minutes that came out sort of late Wednesday, I mean, they indicated they're sort of not ready to go yet, but I think they're looking for indications of more weakness, and get some more lower inflation reports. They'll get it, and certainly the employment reports, when you look at them today, particularly in the U.S. I mean, yeah, it was at headline or a little bit better, but you had 100,000 job revisions downward to the prior 2 months. So I mean, the backwards-looking data is getting worse. Consumer confidence levels are down. The ISM surveys for both manufacturing and services have gone below 50 in the U.S. I just think we're all catching up a downside. Then you know a lot of very more specific data, like I say, consumer confidence from the Conference Board surveys, the U of M surveys, bankruptcies of 100% in Canada, credit card delinquencies both sides of the border. Paul, I just think if we're finally seeing this lagged and variable delay of the increases in interest rates you saw 2 years ago finally come to the fore everywhere, including the United States, which has so far avoided that, probably because a lot of fiscal spending. And I just think that will give them leeway to cut rates into the certainly towards the end of the year in both economies.
In corporate news, the big news in Canada is the approval by Ottawa of Glencore's purchase of a big portion of Teck Resources, the coal mining assets, $7 billion for 4 very large metallurgical coal mines. So what it means to Teck is that Teck is now on its way to becoming a pure play base metals miner. It's also buying back stock. How do you think, John, the market will view Teck Resources in months and years ahead?
It's got to look at this one positively, Paul. This is the right time to be getting out of the coal market. So many global ESG funds, even the past couple of weeks, talked about more about how they're getting out of thermal as well as metallurgical coal investments, which suddenly Teck doesn't fall into that category. So that's great. They realize a lot of cash from this. As you realize, they're going to pay down debt. They're going to give some of the money back to shareholders in terms of a special dividend, I think, share buyback as well. Makes it a pure play on copper. Copper, zinc, and gold to a degree. They got the big corporate Blanca play and Chile, which will be the dominant play. And I think also, Paul, most Canadian managers probably own this one. It's the big play. It's the biggest play for base metals that doesn't have a lot of sort of geographical, geopolitical risk. And obviously, when you look at what happened with First Quantum and the Cobre Panama mine, I think the Teck sticks out even more as quality. But Paul, I think more importantly, I think this could draw more global investors into the picture of Teck Resources as well, because you're going to look at it on the same scale as you look at a Freeport McMoran or any of those global players in terms of the exposures and the valuations, and that also just suggests upside for the stock.
Are you and what is your view on the copper sector generally? Are you a long-term believer in copper and copper mining stocks?
Oh, I believe the story, Paul. Absolutely. I mean, it's hard to ignore when you look at what's happening in the EV market and the demand for electricity in general and the lack of supply coming on. The only thing is these things get ahead of themselves. And I'd almost put that as a warning flag for people investing in AI and tech as well. I mean, when the bullishness seemed to hit a crescendo as copper went through $5. And we sort of got out of some of the copper names for a while at that point, because I looked at it, the Shanghai inventories were actually going higher, and the speculative interest suggests that, financial players in the market had risen dramatically as well, which suggested a lot of speculation in the market. And, when that happens, even if it's a good long-term story, it's going to check back. And the stocks have checked back, and copper prices have gone back to, 440, 450 range. But yeah, still think it's a good long-term story, but I don't know if there's a lot of upside on copper prices here. So, look at the individual companies and the valuations. But it's a warning flag in general when you get this sort of a bulliance in any sector. And I really highlight tech a little on this one, Paul. I worry that, everybody's all in and they're all believers. They don't want to sell. And that's the time you want to be a little more wary about, valuations and other things, because in the end, you know what, they do matter.
John